And I wanted Simraiser with Revere. I said, management, Your Money Radio, along with, let's see, Alex. Alex, man, give it to me one more time. I'm sorry. I don't know why you're disappearing on me, Alex. I'll get all of it straightened out here.
Greek
Go ahead,
names are
Alex.
tough. That's okay. It's Catutus.
Katuda. See, I was going to go Alex the K and just leave it at that. But
That's fine. That works.
It's
Hunter
Alex the
Mazingo,
Greek, man. Alex the Greek.
Yeah.
Hunter Mazingo down Vanderboard. Danny Stewart, we're all live with you right now as I try to figure out why my cameras, I can't see the fella. I can see the fellas now, which this is my favorite time of the week. I get to see all of the fellas. And literally just got the text message from, we're going to have an Uncle Tony email fest today, which is, he raises a really good question, but Danny just got the text. He said, please use my name. So we will, Uncle Tony, we are going to be talking about you today. You asked a great question and we are going to address it as a group. Don, but I want to talk about Bitcoin first. What a run Bitcoin's on. Don, what has Bitcoin been up the last, say, 2 weeks, 10 days?
Well, it kind of formed a base down around 30,000. So that's about a 45% move up to 47,000.
Just, yeah, here's the 30,000 level, comes down to this little ATR. So here's where I really screwed up. Just the entire cyberspace. If you own Square and you own PayPal and GBTC, I mean, you haven't really screwed it up per se. But I didn't realize, one, that I never had downloaded I bought my first Bitcoin, Alex. I saw you shake your head. So I bought my first Bitcoin like 2 weeks or 10 days ago, okay? And off that chart pattern I just showed, but I didn't realize that, and we've been talking about it forever, that I never downloaded the PayPal app and how easy it was to buy Ethereum and Bitcoin. And what I did was I didn't have to transfer any money in there. I had money sitting in there from selling a whole bunch of sports cards last year. And I'm like, why? Because I thought you could buy it on your credit card. So I was standing outside waiting to pick up Remy from daycare. And I'm like, why don't I just buy some Bitcoin? I don't know what the hell spurred me to think I could do this. So I downloaded the app waiting for the kid, bought some Bitcoin with the money that was in there. And that might be the easiest, knock on wood, money I've ever made. And I'm like, why the hell didn't I think of this last year? I literally screwed that up so poorly, which then got me to thinking about Mark from Buffalo, which this might be the earliest Mark from Buffalo. Hunter loves Mark from Buffalo. The earliest mention of Mark from Buffalo, because Mark from Buffalo, what he's been doing has been feeding me all of the rookies for baseball that I should be buying. So Daniel, look at this. I don't know if I have this. Of course I have this handy. That is what I refer to here as the Mark from Buffalo pile that I've been accumulating over the last like 2 weeks. And so I asked Mark if I could do this. There's like about 50 rookies, I think, that are in, it's new baseball card season. So I've been pinging Mark, like, who should I be buying? Like, who might be the next, like, Mike Trout? Like, Mike Trout rookie card goes for like, woo, doggy. Like those boxes alone are like $12,000 from Mike Trout's rookie year, like big. So I'm looking to fuel more Bitcoin purchases here. So I'm hoping that the rookies I bought last year, see that, Hunter? Yep, I'm going to buy more Bitcoin with these baseball cards. And that's my circle of life. Like I'm going to sell these things if one of these guys pops, and then I'm going to purchase more Bitcoin. And I'm going to see how much I can turn my baseball card money into Bitcoin money. Because we're going to 100,000, right? Like Bitcoin's going to 100,000. We're all agreed on that?
That brings Got to figure out how to recoup all that Carson Wentz card money, I guess.
Well, here's the thing.
That's part of the Bitcoin play, I guess.
What's that, Hunter?
Carson Wentz losses.
Hold on, I've got a solution for that. So I have hedged. Listen, this whole show is hedging. So I have hedged my Carson Wentz bet with a ton of Jalen Hurts cards. So I'm going to lose twice on this trade. This is my gut feeling. So because hedging is so hard, right? And the whole theme of this show, we're going to talk about hedging, talk about some options, talk about how to utilize the ATR charts, like when your stocks get too extended. It's kind of where I'm heading with all of this. But yeah, the Bitcoin trade's been like that. Like, God bless. And it goes up more. Alex, are you into the crypto? Do you follow it?
Yeah, I was getting in around Thanksgiving, actually, around 18,000.
I would have appreciated a heads up that maybe I should take my baseball.
I wasn't with you guys yet. I would have totally.
No, I hear that. I hear that. I totally screwed. It never even dawned on me to take that money and do anything with it. I just let it sit there. I forgot all about it. And I'm like, oh my gosh, why
It hit new highs and I was in. Like, that's my signal. That's all I need. If stock or an asset hits a new high, I'm looking at it. And that's why I got in. I didn't go crazy, you know.
Oh, I went crazy. I took all the money. Just, I
Yeah.
put it on block. I guess I diversified by buying 2/3 Bitcoin, 1/3 Ethereum. So I don't know if Ethereum has the potential to run as much as Bitcoin, but I like the Ethereum, and I can't even tell you why Ethereum is. I don't know much about it. Can anyone tell me about Ethereum? I'd appreciate a quick primer. No?
Only thing I really know, I mean, at one time I
It's a
knew more, but
cryptocurrency.
Thank you, Danny. Go ahead, Honor.
different applications in regards to their blockchain technology. Ethereum's better for certain things than Bitcoin is and vice versa, but I don't necessarily know the details of how that works.
That's good enough for me. It keeps going up.
We've got a client that's in technology, and he sent me an article. I'll forward it to you guys. It's more on Bitcoin, but
that would be absolutely fantastic. So, yeah.
By the way, before we move on, when Don was talking about your Carson Wentz card, make sure that you keep all your losing card losses in, so that you can offset your gains on the ones you sell for a profit. So you pay much less gains.
My dream
And the
scenario
CPA coming through.
is that they trade. What is the accounting on rolling that money selling cards into Bitcoin? Like, that's going to be interesting accounting. What block is that on my tax?
I have to look that up and see if they qualify as collectibles, but I would assume they would. And then you just get a certain capital gain rate for those, and it's long-term, short-term. So
how are they regulating that, Dan? That, like, if you open up a Gemini account and you buy Bitcoin, how's the IRS gonna?
Well, the Bitcoin, I'm not so sure of how they track that.
They ask you on the tax form now, have you traded?
They ask you to be honest.
If you actually get audited, and they do an audit of your bank account or brokerage account or what have you, they say, hey, where'd this money come from? I see this big deposit for 25 grand or 50 grand, or where did that money come from, or where did this money go? And so if get caught lying, you're in big kimchi.
Yeah, there's a rule I heard that if you make a mistake on your taxes, they're more lenient, because if it's an honest mistake. But if you avoid your taxes, it's going to jail. Like, there's a huge difference between making a mistake and avoiding. And
what's that saying? There's 2 guarantees in life.
Yep. Gosh, I didn't realize.
From a client perspective, we got into Bitcoin on 12/16 for the first time.
Through GBTC.
Through GBTC at 25.79. Currently sitting on it.
What has that gained in that since
89%?
There you go. Yeah, I could have done. I'm so disappointed. At least I'm in now. Like, I'm disappointed. Where's 12.50? There's 12.16 on that gap right there. But at least I got it back when it pulled back to the 21. I was like, and that was just by luck. That wasn't by that. I literally never realized I had the ability to download the PayPal app. I'm just not that bright some days. So let's do this. I asked Mark from Buffalo if people could reach out to him, and literally it's Mark from Buffalo is his Twitter handle, and he's got a little picture of a buffalo. He will send you the rookies that you may want to pay attention to this upcoming baseball season, and who has the ability to appreciate, and then you too can go collect this. But Mark is an awesome dude, and I love asking him for that kind of help, because I don't study it like he does. All right, Danny.
Yes.
The last 2 days, I've gone to the mailbag. So I did a video last night. It was a viewer question on protecting gains when my stocks get extended. Okay, and then the previous night, if I scroll down here, I was talking. I mentioned NVIDIA in this video in regards to probabilities. and buying at extensions. And so that prompted an email. So there's people in our circle, right? Like we're all active on Twitter. Like I'm at TJ Razor, and I prefer that's how you get a hold of me. It avoids the see, it got a message right there, it just popped up. It avoids the long emails. Danny is one Danny Stewart, which Danny, that's do you want to explain that cartoon? Because that's pretty interesting, because I got a thought on it as well.
It's just the Fed. They've dug themselves in the hole. They're clowns. They're not going to be able to control this at some point.
And there's Don, D Vandenborg on Twitter. And my preferred method is that you get a hold of me on Twitter. So my DMs are open. You can just, if you just have an account, you're like, I don't want to follow you, Tim. You tweet out pictures of your boy. Then just message me. You don't have to follow me to message me. So I've got a ton of feedback on hedging and NVIDIA. And so I decided to do a video on it and talking about probabilities. And so here's NVIDIA. NVIDIA looks great here. Not NVIDIA, no, it was Roku, pardon me. I said no, NVIDIA, I meant Roku.
That looks good too, though.
Yeah, that looks great. So Roku comes up on, what day is this, Tuesday? I believe it's Tuesday. And it hits this wick of the third ATR, and you can see earnings are next week. And my point was during the day was, taking the day of the trade, it hit 485 for the most part, and then cycled all the way back from 450 or to 450 at the low here. That's a big range. And you can see on an hourly chart, the normal range, if you look at the lower left-hand side of my screen, is $6.30 on average. And this thing cycled back, 25, 30 points. And so my point here was that it's probabilities, that the algorithms are programmed to pretty much sell when you're at that third ATR in a daily chart. And it doesn't have to happen that way. But do I want to initiate a position here, or do I, on Tuesday, what was NEO doing on Tuesday? It was at that one ATR. Or do you want to initiate a position, say down here at the 21, where I believe the probabilities are more in your favor that you're not buying extended? Well, that prompted an email from Uncle Tony. And so, and this is from a place with love. And I know Uncle Tony sent this from a place with love too. But so what I did on the other video, if you watched it, if you haven't seen it, you can see all the ways to hedge, and we're going to talk about it in a second. I paraphrased a couple of questions from a couple of really good stock nerds and market lovers. But here, I've got Uncle Tony's email up, and I'm going to have Danny read it. Danny, I know you've got it on your phone or your computer, so I'll let Danny read it. I'm going to leave it up here so stock nerds can follow along, and then we're going to address it, because there are some concerns here. Go ahead, Danny.
It says, Tim, you've got some splaining to do. Take a look at your Roku chart from the other day. If you had bought it around 1120, I want to get that, 1120, which was against the third ATR line, that's on the upside, you would have been fine. It rode the third line for over a month. You'd have made a killing in the middle of December if it did return to the middle of the curve. That was 6 weeks later, however. After that, it rode the third line for another 2 weeks. I understand we are talking about probabilities. That's the key sentence right there. I understand we are talking about probabilities. This stock is only one example. In fact, that third ATR line acted as the upper limit throughout the stock's run. However, and this is huge, as the stock continues to climb, so does the ATR lines. You never point that out. As the stock sinks, so do the ATR lines. And again, you do not point that out. They are fixed. If they were, a rising stock would blow right through the upper bands every time. As long as the stock climbs at a slow to moderate rate, the ATR lines will climb along with it. If the stock moves quickly, as it did in January, then and only then will the stock have a high probability to bounce off and correct. This is just math. It is the same with the 21 and 50-day lines, the 50-day moving average. All of these are averages over time. If the stock moves slower to slower, the correction to the mean can still happen as the stock rises. You do mention this point. A stock doesn't have to drop in order to get back to the mean. The mean can rise to meet it. I understand you were trying to show, I understand what you were trying to show in these videos. I also have a deep math background and can parse what you are saying. It is good stuff. I think that many of your viewers do not, however. This Roku chart is cool, actually. It shows the progression as a stock moves moderately, when it moves up quickly, and how the ATR line bracket the movement as it corrects. Again, this is good stuff. I don't want your viewers to discount what you were saying because they got in at one of the benign, at one of the, I think he meant beginning, ramping up zones for a given stock. He thinks that your probability curves are gobbledygook, nice way of saying BS. ATR lines, their widths vary stock to stock, and every time the stock, their widths vary stock to stock. That's why you have the ATR, and even the same stock over time. Yeah, it fluctuates. Tesla, for example, isn't as volatile as it was before it entered the S&P, because one stock rode the third ATR line into happiness doesn't mean the next stock will. It probably won't. Okay, it's rack time in paradise.
Okay,
So,
hold on a second. So he followed it up with a text this morning. So my reply to Uncle Tony's email, I texted him going, dude, that's a lot of words. And so that's pretty much a quote. And then he texted back this right here. A lot of investors think probability is certainty. It isn't. The chart shows this. That's my long-winded point. Yeah, and so I think I've mentioned all the points Tony's mentioning here, but there's a good chance that maybe I haven't, and we should address it because, like, if you got in here at 11:20, oh, hey Don, give me 1 second here. I want to see something. Hey, I just muted you, Don. Just unmute yourself. There's some static coming over your line. I'm not sure where it's coming from. Let me see. I'll unmute you. Cannot unmute. Can you unmute yourself, Don? Let me check it. No, you can't unmute yourself. There you go.
There.
It's better. So what I was saying with Uncle Tony here. So if you got in here at 256, of course you're loving this stock. And Chipotle did this back in the early aughts, and Chipotle's done this a number of times, where it just rides this wave. And so look, everyone is responsible for their own fate. So you can take this consolidation. So things that consolidate at or near all-time highs, and we have talked about this. As a matter of fact, I mentioned it last night in the video, that they're continuation patterns. How long does it have to consolidate? And I mentioned it in terms of the weekly SPX chart. Like if we go on to form a 3 weeks tight pattern on the SPX weekly, or we expand that to a flat base where you're going 5 or however many weeks out, those consolidations at or near highs, that the indices are just collecting their breath, but there's a ton of action underneath the indices with a bunch of stocks. There's always going to be that rotation, and this rotation that's helping prop up the indices. That's how that pattern develops. It's super duper bullish. So the indices or stocks are just collecting their breath here. And so if you're okay with understanding the risk at buying at the third ATR, and this is all about risk and probabilities. That's what markets are to me, risk and probabilities. I heard Don, did you say it in a video or did you send it in an email that markets are a math problem?
I've said that multiple times in multiple situations, and it really is. And you're never going to know whether or not the first touch of the ATR is the right time to sell. Getting back to the point of the question that the person was asking you, all you can be confident in is that if you have a system and it's a profitable system, that whatever decision you make was the right decision by your system. If you're just guessing and sometimes you take some off at the +3 ATR and sometimes you don't, then you're being undisciplined. As far as taking some off and then thinking that you top ticked it, there's one person that gets the high price, and it's probably not going to be you. So anybody that thinks that they're going to sell at the high or buy at the low is just really kidding themselves. It's just probabilities and possibilities and weighing them and making your decisions.
And for me, I said this last night, and I kind of like the analogy where we're playing grenades here. We're not playing horseshoes. And so look, if you bought this looking for higher price action, oh, not now. I don't know why that popped up, but if you bought this right here looking for the higher price action, you eventually get it. But look, this price here, so I guess the point is whatever the person or the investor's plan is, but that's a beautiful consolidation right there too. Whatever your plan is, this level was like 256. What was this level? 250. You got another chance at 317. And so, and you got another chance here at 389. And so when I'm talking,
yeah, but both of those chances come with a lower probability that you're going to make. You have to look at where the stock was and where it's gone to set your expectations going forward. It's just like, is something breaking out of a stage 1 base or a stage 3 base?
That's an interesting point.
The odds are higher that it's going to fail coming out of a stage 3 or 4 base. A little, if you're a few months into a bull market as opposed to a stage 1 base at the beginning of it.
I'm glad you just said that, because that's a really, I don't know why I cannot keep you guys up here. I cannot see the fellas that I want to look at while I'm talking to them, which is extremely annoying to me. But let me see here. And I've lost the chart that I actually want to look at. Can you guys see me? I'm gonna make sure that
everything's perfect on our end, on my end anyway.
Okay. So Don, you said expectations. You said stage bases, and that's a really interesting point, because when you said expectations, my first thought is when I buy a stock, I might do some fib work, and I might look at the ATRs, but I don't think that from this. Just use this for example. I don't know, and I know you know that too, or you think this. Like whatever this price level is here, I don't think it's going to go from here. But if it's my setup, what I expect though, if it closes below typically this 1 ATR, I'm probably going to want to sell it, because something with the setup isn't right, because this is the 21. And if we're heading back to the 34 or the 50 day, the setup I was looking for this to take place isn't panning out right now. So in terms of price expectation, I don't know if I have price expectation, but I have stock behavior. And that's what the fundamental mix and the technical mix that we're applying to stocks. And it doesn't matter what the name is. There's a gazillion stocks you can just apply this to, and we've got a lot of Don's got a ton of them in the portfolio right now, where you're looking for certain behavior out of the name. And if it doesn't deliver, what do you do with it, Don?
Well, you get punted.
Yeah, and so if the stock's not doing the job to which you signed it up to do, you just sell it. And so you can hold, like if you bought Roku at 1120, just know the risk. If it's at the third ATR, know that the probabilities of riding that third ATR like that, it doesn't happen to a bunch of stocks. But if I show you, and I'm going to show you one that it's happened to a lot of stocks. So
before you go from that chart.
Yeah. Oh, I'm sorry. Go ahead.
I'd like to address a couple of points. I get what you're saying. So pull that chart back up.
It's up.
So if you look at the points, if you go all the way back to the beginning of the chart on the left corner, and you kind of put little arrows wherever it hit the third ATR, right?
Right. Yeah.
4 out of 5 times, or well, let's see, 1, 2, 3, 4, 5, 6. So about 5 or 6 times, it actually pulled back. Now, yes, it did right there through 11:20 all the way up through 12:18. It kind of rode that third ATR all the way up. That's true. And then again, around 1:10, 1:15, it kind of rode that up. but you really know that in hindsight. You don't know that in advance, and yet you're picking a leading stock, so it's better than like what you're about to show. Probably is not a good stock, but at least you have some kind of discipline. And you always say, Tim, you can't touch all the water. No. So if sometimes you'll miss it, you might miss it, but at least you have a discipline. So if you're buying around the mean, then you have better probabilities going forward. Now with Tony's comments on his math, right? So yes, absolutely, the ATR is different for each stock. That's why they call it average true range. It's the average true range for that stock. And that does change over time depending on the volatility of the stock. That's how you're measuring. You're kind of putting statistics in there to measure what is an irregular move for that stock, both to the upside and the downside. But this is a little bit, so these ATRs are sort of like a oscillating indicator, kind of like Bollinger Bands, overbought and oversold. It's just kind of helping you to look, when is that stock a little bit lofty or overbought, or when is it a little bit oversold? So it kind of helps you to determine a better entry point. And Tony's right. If you get it in this point, if you get a stock that's just blowing up, blowing out, just going up quickly, then it's just going to become more overbought and more overbought. It'll blow through the ATR and the Bollinger Bands, both. If the stock is crashing, same thing. Then they're just lines on a chart. It'll blow through Bollinger Bands or ATR charts or any kind of thing that is helping you. But when you start blowing through that, especially to the downside, that's why you have the exponential moving averages. You have other support levels. You have other things you're looking at. You're not looking at it in isolation. That's how you know when, look, the thing has changed, the primary trend has changed, it's time to get out.
So what's interesting about this, so I put up the weekly chart of Roku, and you can see it's just rode that third ATR rail on a weekly time frame. And so we talk about all the time using smaller time frame charts to time your entry. So if I'm looking at something on a weekly and it's extended, well, how do I want to buy that? I want to buy that off the daily. Or if I'm looking at something on the daily, I take it down to a 4-hour, or I take it down to a 78-minute chart, so I can, or a 30-minute. That's the lowest I'll go to time my entry into something. But there's a whole bunch of things that you can do if you're taking the risk of buying at whatever time frame you're looking at, a probabilistic level for a pullback. You can do a number of things if you're willing to take the risk, such as trail up your stop. And there's a number of ways or as Mark from Buffalo said, just sell. Like if you got a really good profit and you're just going to wait for another pullback, just sell. But I'm going to throw it out to, we'll go Alex, then Hunter, then Don. Because I talked about it ad nauseum in that video from Thursday night. So go to revereasset.com. And then it's, let's see, got to scroll up. It's the Feb 11 video where I talk about your stocks extended and there's some strategies to which you can do to hedge. But I'm curious of what the fellas think here. Alex, I'll go to you. So you got a stock that is extended, or you're going to buy it extended. Let's give you both scenarios. You're going to buy it what would be considered extended off the ATR charts. How do you handle that?
Well, the first thing I would do is measure my risk, and I keep things simple, to be honest. So if the stock's around the 80 EMA, I will use that to get in. And then maybe if the 21 EMA is near that, and it's about, let's say, 2 or 3% underneath that, I would use that as my stop. And you got to have your time horizon in order. Like you can't go into a stock and buying it at all-time highs, very extended from the 50-day, expecting to make a killing when it's already had a big run. You have to be honest to yourself that, okay, this is going to be a swing trade, a couple weeks. If you're looking for a longer-term investment, you may want to, wait for a better entry closer to the 50-day moving average or a 21-day. Now on Roku right there, that 11:20 breakout, that looks good to me. I mean, it based all the way from late September, early October. If you draw a ceiling line straight across parallel or horizon line, that's an area that you have pretty good odds, and you could hold that for a longer term play. And look what happened. It never came back to your pivot. Never broke that area you got in. So if you put a 2% stop underneath that, or 3%, kept it kind of tight, you're sitting pretty now. I mean, easier said than done. But I mean, you can go pull up Tesla. I think is a really good example. When it broke out at 500 at all-time highs, this was before I was with the Revere team. I was personally buying this at 480 and then into the breakout area at 500. It was a nice long base. You have good odds there.
You talking split adjusted, or are you talking down in this base right in here?
Yeah, right there. It was after.
Gotcha.
So it was after the split.
Okay.
You know, your odds there, and I knew my time horizon. I'm like, okay, I want to get into this name for longer than 2 weeks. And listen, it never broke below 2% where I bought it. So I held it. I still own it. There was no reason to sell. So that's an example. That's at least how I would do it. Mm-hmm. If you're going to buy, like, let's say it was a few weeks ago at 900, you have to be, your expectations now are in the very short term. And it comes back down to 860, 850, get out. That short-term trade's not working for you.
So ironically enough, 900 was what? The third ATR.
Yeah, there you go.
Yeah. Hunter, what you got, man?
Yeah, pull up that Roku chart again. I mean, and a lot of things that Alex said I would second, but I mean, the breakout looks good right around 1120. There's some decent volume on it. I mean, it's certainly something you could look at and be, say, okay, I want to start a position. But for me, on a breakout like that, I'm probably going to use the 8-day EMA as a way to gauge its strength. And so
let's get that up there for you.
And it's going to be pretty close to that third ATR for the most part, at least as it moves up. So you can see they did not close below the 8-day EMA until, let me look at this and get the exact date, the 28th, which is going to be really the first ugly candle after that big ride up. Yeah, so I mean, that's the way that I would look at it. And sizing your stop a few percent below your entry on that gap up, that works too. But when things start to break the 8, or leaders start to break the 8, it usually means there's a decent chance they're going to go back and test the mean or go back to the 21. And so I know Uncle Tony's talking about probabilities and math, but the simple fact of the matter is the probability that a trade is going to work out for you if it's a leading stock is much better if you buy at the mean than if you buy extended, in regards to from your position size anyway. So I mean, there's certainly scenarios where you can buy extended, like this Roku breakout on 1120. That's a valid scenario to buy extended. It rode the 8-day or the third ATR for a while, but it's not extremely commonplace for a stock to ride the third ATR for over a month. So,
and before I toss it to Don, who just disappeared on me, it helps to define leading stock, because that gets thrown around a lot by a lot of people. And so there's a certain subset of fundamentals that we're screening for. And then you match that with technicals. And not everybody does this. Like a lot of people in the IBD world are like, well, that's common sense, right? And it's just not. And 99% of the world doesn't, of the investing world, doesn't take fundamentals and marry them with technicals. And by the way, which fundamentals out of all the fundamental factors that you could be looking at, which ones make the biggest difference? And that's really the basis of what William O'Neill based it. It's the whole 7 facets that make a stock have the propensity to want to go higher in the right market environment. It winnows it down what you're really doing, but you have to have a definition of leading stock, and we absolutely do. But without getting into that, Don, talk to me about Roku and how you define.
There's something very important that William O'Neill would say is it's not the chart that makes the stock double. It's the story behind the company on the chart. But if what we're talking about here is offensive selling, there's 3 other questions that you need to ask yourself. So let's take the scenario where this touches the +3 ATR for the first time.
Sure.
What is the market doing is the first thing you want to ask yourself, because that pullback in October that you showed for Roku from the third ATR back to the mean coincided with a correction in the S&P 500 at the same time during the month of October. So that's the first thing you need to factor in. The second thing is what are the sector or this stock's peers doing? Or if they're acting well, then you might as well continue to let it ride. And the third thing is the behavior that the stock's doing out of character for the normal behavior of the stock. So if you get up to the +3 ATR, that in itself, in my opinion, is not a sell signal. What happens after that is what dictates the sell signal. You used the two things that you said last night that are great takeaways is take off a third or a half if you want to. And the second one was use a 3-bar break to dictate. So in other words, you're letting it run, but you're kind of setting a trailing stop on the way up. Those are two great ways. You're never going to get it right all the time. But again, if you've got a system and your system has a positive expectancy, the decision that you make as part of that system is the right one, regardless of how the stock turns out, because it's only in hindsight that you can point, oh, well, look what it did. So those are the three things that I would consider: is what's the market doing, what are the stock's peers doing, and is this out of character for that stock? Because there's one thing being at the plus ATR, there's a different thing being 20% extended from the 21-day exponential moving average, because that's just ridiculous, and you're going to have a pullback.
Give me a stat, Don. I want to switch up the drawing tool here. Oh, I've got the right one selected. Give me a stat, and we're going to do this for folks right now if they haven't ever seen this. How far extended off the 21 on average does a stock get before it wants to consider pulling back?
I would say a stock that has an ATR of about 5% a day, if it gets 20% above the 21, that's 4 ATRs.
So so here's Roku.
You're primed for a pullback at that point.
That's Roku at the third ATR where I just drew that arrow. And what we'll do is we'll take, and this is kind of shanty way to do this, but I'm going to put a dot on my screen and I'm just going to run it up to the mid-level of this price. And here you can see that minus 14, it's positive 14. It's 14.5% extended above the 21. So even if you're not using ATR, you can just look and go, okay, I might want to consider trailing up my stop. And look, this is a daily chart, which for some folks may be too short in time for. Here you're about 14.5%, and you can see there's no perfect system here. You go up a few more days, but then you kind of give it back from that point. There's just no perfect hedge. And you mentioned it before, Don. You're not gonna sell it. I mean, sometimes you sell the top and it feels so good. It's like golf. When you hit a good golf shot, and I suck at golf, it gets you to come back. You're like, oh, I'm going to come back to golf. Alex, you golf?
A little bit.
Are you in Phoenix? Where are you at in Arizona?
Scottsdale. So it's the golfing area.
Yeah. What's your favorite course? Is it Silverleaf? What's your favorite course out there?
See if you can get there is really nice. That's where they just had the Open.
Okay.
Waste management. But there's a couple of new courses in the area that are really nice. If you guys ever come out, I'll take you.
I was just out in Phoenix March of last year, right before the whole country shut down for spring break with the kids. So there's just no perfect way to hedge. You're going to hedge, and look, the hedge is great if like the stock market sells off, your stocks go down, you're like, my hedge is working, and you feel really good about that. But it's at the same time, like if your stocks are going up and the hedge is just sucking wind, you're like, I hedged again. In this market, hedges really haven't, like, you're not looking to make money off your hedge. Like your point is, Don had a really good phrase on the text. I'm hedging here because I want to stay in the strongest stocks. I don't want it to affect. And that's a really great way to look at it. But if you're going to be 50% hedged and you're hedging your whole portfolio so you get zero sum, I mean, part of me thinks, why not just sell some to reduce the risk? And you can always re-enter at a different price. And then you're just not gonna be able to touch all the water. If you want to touch all the water, buy an indice. But that might be very narrow-minded thinking on my part. Danny, what you got?
Well, by the way, the definition of a hedge is an offset. I mean, that's the whole point. So when you're hedging, you probably, if it works as a hedge, that means the market may slightly pull back but move higher, so your stocks are going up, and hopefully your stocks are better than a broad hedge, so your net is slightly up. But that hedge will probably have a small loss, but you can ride out that short-term pullback or volatility. Now, if the market continues to go down, then some of those stocks will break their charts. You end up selling those stocks, and you may actually end up net short. At that point, it's not a hedge anymore. It's a proposition to make money. So, you know, it's just about definitions. And one more thing on the ATR chart you're talking about.
Oh, go ahead.
Not only when it gets 3 ATRs above, not only are you talking about offensive selling for people that are already in the stock, if you're actually looking for an entry point, you would wait. You would pass on buying at the 3rd ATR as an entry point.
Yeah. And
yeah,
so
that's as important as deciding whether or not to sell is knowing when not to get in.
Right.
Yeah, and it doesn't mean it can't go higher. It's just
Probabilities are against you. Probabilities are against you.
And you're just looking to put all the odds in your favor.
Yeah, look, if you buy a stock and it immediately pulls back 8 or 10%, oh man, you're second guessing yourself. You're going, what am I thinking? I mean, it screws with your mind. And sometimes if you pass on that, it's a 3rd ATR and you don't buy it, and it goes up another 5 or 10%, you feel like, oh my God, I missed out. But that's, 4 out of 5 times it's going to pull back, and you're going to second guess yourself. So it's
that's a great point, because if you bought, and we'll just use Roku, if you bought Roku right here at 450 and it pulls all the way back to 400 and you sell because you're like, oh, this stock's going much lower, and then it just goes on to take out its high, you could be in the best stock that the market has to offer, but you just bought it wrong. And it happens all the time. And so anything you can do to put the probabilities in your favor works. And sticking with the hedging theme here for just a second. So one of our very good friends who has sent a number of people to Revere Assets Way had a question on the video I did last night. He said, well, because I talked about covered calls, right? And I'm not going to rehash the whole video I did, but he said, what happens if the call that you sold, like you sold a call, which means you're bearish. So like, let's use,
or you're trying to generate cash flow.
Yeah. So let's say you own Roku. Let's just use Roku, ROKU. So let's say you use Roku and you sold the 450s, and clearly you sold those, and because you bought it at like 200. I'm making up numbers here, and you're just looking to protect your gains. You're looking to take in some theta, but Roku has had an outsized move, and clearly it's trading above 450. What do? Well, there's no perfect hedge. Just buy the call back. Take, like you try to generate income off of that, and if it's going against you, you can just close it out. But then I gave another example, and I said, well, if I'm bearish the market, but I want to keep certain stocks that I think are winning, I typically use the indices to do this, because the stocks, there's too many games played with stocks, upgrades and downgrades, or they do a secondary, or I've been burned by all of these things. And so I want to show you where it's not going to work in your favor. Like here's MJ. So let's say you had a big gain in MJ, or pick another, TLRY comes to mind here. Tilray, you had a huge gain in Tilray, and you're looking to protect that. Protecting that with the indices, like let's say you want to protect it with the QQQ. There's nothing bearish about this chart. It's just a consolidation. And so you trying to protect your high beta stock with the indices isn't going to work here. And so for me, what I'll do is, and I've been burned, I've been hurt every way the market can hurt you. And I swear to God, I've invented new ways for the market to kick me in the rear end. Did we lose Danny?
I think he had to step away. I don't know why.
I literally just looked up and I see, okay, that's where Danny is on my screen. I don't know where he is on anybody else's screen looking.
He's back.
I'm right here.
Where did you go?
I had to run, check on something real quick.
You're fantastic, man.
None of your
Did you have to
business,
pee?
in other words.
Did you have to pee? Tell us if you had to pee, because that's funny as all get out. Did you have to pee?
I had to check on something.
You had to go check on some stocks?
You also
Yeah,
circled him where he's not. Your screen's
really?
different from our screen.
Have you ever, is that the first time you've had to get up and pee mid-show? Like, I literally didn't realize you left.
No, that is actually the very first time. Way too much coffee.
Hey, Tim,
I got up early this morning. I had too much coffee.
That's fantastic.
that chart you have there is this is whenever you're checking on an ATR of one of your stocks, look at this one. Where is the SPY and the Q on the ATR? Because they seldom go above their 2. When they get to the 3, you know a pullback's coming.
Man, that's
on the indexes. Now, individual stocks can do whatever they want to do, but you're pretty damn sure when you get to the +3 on one of the indexes that a pullback's coming.
It's really prevalent on the SPY, and I've highlighted this a number of times on the SPY. But these are bullish consolidations, and so, well, Tim, it's at the 2 ATR. To Uncle Tony's point, and this could consolidate, and these lines are all moving up, and you don't really get the pullback to the RTY or the IWM has done exactly what I'm describing here for so long, where it's not really giving you, it gave you an entry here at the end of the month where the month got tough, but this is a consolidation. This is bullish. Yeah, could it pull back? But you're going to have underneath the small cap stocks, and a lot of the MJ stocks are small cap, you're going to have this vicious rotation taking place. And who knows if the rotation out, it just came back to the zone of the mean. And so, like, there's a bunch of people that missed this MJ trade, right? And so there's the mean. You're trailing up a stop, but somebody bought 35-ish or right under 35. And you just got to understand the risk you're dealing with when you do that. Now here's the zone of the mean, and lo and behold, it held. And remember, we're playing grenades, not horseshoes. So in between the +1 and the zone, that's the zone of the mean, man. It came down to the zone of the mean. And so hedging your high beta stocks with the indices is pretty much not the answer. But keep in mind, how would I have handled this? Look, I'm going to buy something at the mean, and normal stocks don't do this. And so I typically will sell either like a delta, if there's a lot of juice in it, like a delta 10, or I'll sell the third ATR call closer. And like, let's say I held calls or I just held shares. I would sell this third ATR price level for the current week, or I would sell a delta 10, which really means there's like a 10% chance that price is going to hit it. But every now and then, as you've seen with Bitcoin, as you've seen with pot, it's done those moves. There's no perfect system. And sometimes the answer is, if you just want to own it and understand the risk you have if you don't take profits, and understand the risk you have if you put something on to protect those profits. There's just no perfect system. Alex, you got anything to add with that?
No, I think you pretty much covered it all. You did a good job explaining that.
I'm sorry, I didn't mean to put you on the spot. That's what this show is about. We put people on the spot, and then we every now and then we try to catch.
Bring it on, I'm ready.
Yeah, we try to catch Danny. This wasn't you, but we tried it. Dallin and I will try to catch Danny, and Hunter's not brazen enough to do this yet, but give him about 10 more shows. We try to catch Danny not paying attention. And so
rarely happens.
Unless you leave the chair to go urinate, or as you call it, you just headed to the little broker's room.
Oh, there's a first time for everything. Speaking of Hunter, I do want to address that new haircut, Hunter. What, kind of explain that. Prince Valiant, what happened?
Hold on a second. Before you explain it, where did you go to get that?
This would be, and I'm going to name drop here, Prestige Barbershop, just a minute or so from my house here. And I'm no longer Prince Valiant. We mentioned that before. I'm a fourth of the man I used to be, apparently. At least that's how much of my hair took off.
You know what's funny though? You have to be very...
talking about it because he loves it. He wants to use that barber. He's
thinking about the Prestige tomorrow, man.
Where you go?
Hunter, are you gonna shave your head now like a watermelon, or?
No, so that's a different conversation in regards to watermelons, and I meant to bring it up when we were talking about Bitcoin earlier, but there has been a bet made that I will eat watermelon on the show if Bitcoin hits 100K this year. So if at any point in 2021, initially it was I'll eat a whole watermelon with nothing but my mouth, no hands. But then I thought nobody wants to see that.
I pretty much want to see all of that.
Far too long.
I think that's the whole show. Like,
by the way,
talk
so tell the viewers why the watermelon.
Yeah,
Because
the new viewers. Yeah. The new viewers go back and listen to the show 2 weeks ago because
I don't understand the hatred of watermelon.
Not stand watermelon.
Fake watermelon.
And then Mountain Dew made their watermelon flavored debut during the Super Bowl, and that didn't excite Hunter either.
Don texted all of us and said, "Hey, we got to get Mountain Dew watermelon for Hunter."
Exactly.
So yes, back to my haircut. Worst experience I've ever had. The guy next to me getting his haircut, absolutely hammered, and the most obnoxious individual I've ever met.
Wait, the guy giving you your haircut was drunk, or the guy next to you in the chair was drunk?
At least it wasn't your barber.
He very well may have been drunk too, given the nature of the haircut.
Odds favor.
So it was
very
an
careful
interesting
here, Hunter.
experience.
If Alex, Don, or Danny or myself come off too heavy here, see, here's the problem. You're now like Taylor Swift. Yeah, here's the thing that has happened on the show. Taylor Swift has the Swifties. Now, Taylor Swift, by the way, from Wyomissing, Pennsylvania, not too far from where I grew up in Robizonia. Ironically enough, Wyomissing, the rival high school of Conrad Weiser, where I did go to the illustrious school, picked up a fumble my senior year, ran it back, sealing the victory for us. First win over Wyomissing. It got us to the playoffs. Don't need to Al Bundy you about that right now. But
Cue glory days.
Oh my gosh, absolutely. By the way, speaking of glory days, what's the irony? Dude does a Jeep commercial, then gets pulled over for drunk driving.
Mm-hmm.
Irony. Absolute irony.
That's
anyway,
karma for selling out the working man.
So Hunter, we're just gonna bypass that time like you didn't even say it. So
Yep.
Hunter, so Hunter's like Taylor Swift, man. Taylor Swift has the Swifties, and if you come out saying anything bad about Taylor Swift on the internet, the Swifties come out of like every orifice of the internet, and they just attack you. Hunter has developed such a love. Like, people love Hunter. I don't know if they think like Hunter's our long lost son, or Hunter has a cuddly aspect to him. That haircut, you're going to be endured even more with that haircut. Now you're just a cute kid with a bad haircut. Like, they're going to love you even more. And if we come off as anti-Hunter's haircut, it will be hell in tarnation in our inboxes.
Prestige.
So I'm going to come out and leave.
So Hunter's going to have his groupie followers.
Hunter has his followers now. Like, I get a shit ton of emails. Shit ton is a lot. Like, it goes ton, shit ton, megaton, and then like, what the hell? It's just a lot. And he's got like all these people. So when you come out hard against Hunter, my DMs and my inbox fills up with Hunter love. And so you just want to be careful how you tread this. Like, Hunter is the new Taylor Swift. He's the Taylor Swift of stocks.
He's Sweetums.
Like, he's got a couple breakups. He's going to write some songs about it. Like, maybe, Hunter, what's the last stock that treated you wrong?
Well,
DKNG is a love. You've had a crush on, how's DKNG doing? You've had a crush on DKNG, but I feel like DKNG
hurt my feelings yesterday. We had an altercation and an argument yesterday, but it's acting fine today. I'm trying to think of the last one.
Protect your reputation. We use the word altercation and it's acting fine. You're not controlling here, are you, Hunter, in your relationship? No.
No. Just you didn't want to be sweet to me yesterday.
There was no domestic violence that occurred.
Yeah, because I'm going to tell you what, like in the world, like when you were choosing who to date in Penn and DKNG, I feel like maybe you sold yourself short, right? Like, do you have eyes for Penn? Are you that?
I do. I've personally owned Penn numerous times over the course of last year. I believe in DraftKings a lot more for the future. I mean, Penn to me is Dave Portnoy, and I also believe in him a good bit as well. So I mean, I like both, and I know Penn from a price and volume and chart standpoint is the leader. But I believe the future for DraftKings is brighter.
So Dave Portnoy is walking
third ATR chart. Look at that. Third ATR chart.
I'd pull up the meme of Dave Portnoy walking by, Hunter walking with his girlfriend DraftKings, and Hunter going like that, looking at Dave Portnoy's butt. But I feel like that's what's happening here. What's the stock that's really treated you bad, Hunter? Let's write a song about that. Which one? Who hurt you?
Penn was added to all portfolios this morning off the 21, by the way.
There you go.
At
But
114 and change. Two buys
But
average 114 and change.
look how we were talking about the third ATR.
Yep.
You know, look how it hit there, pull back, and then go back down, and look, boom, boom.
And that's a case of what I mentioned. How does the stock normally behave? Penn doesn't normally shoot up and get to the third ATR that quickly. I mean, that was a 2-day run after earnings. So a harsh move up like that very often indicates you've got a pullback coming, and it did in this case.
What you got, Hunter? Who hurt you?
One that has, it's not like it's been, you know, it's been a terrible stock and it's gone down. It's actually the inverse. Pull up Futu. And we're going to talk about one of the worst mistakes I've ever made in my life, really. That's
I wanted to buy Futu, and this is the man that this has been.
So you zoom in on that, the consolidation right there. So right before it broke out.
Yep. I know exactly when you're talking about.
About right around 38.
Yep.
I'd bought around maybe 42, 43 range. And it just ultimately it hit my stop and actually went a little bit beyond it. And finally, I just had to say, I got to cut it. And lo and behold, I cut it at 38 and it went all the way over 200 yesterday or the day before. And so brutal. The moral of this, did everything right. I identified a leading stock. The numbers were phenomenal. And, you know, maybe I bought a little early and got shaken out too easily. But regardless of that, I should have bought it back and I didn't. And that's the lesson to be learned.
This is a proxy for Robinhood in China. It's not, Robinhood doesn't own it. They don't have anything to do with it. But there's a couple of proxies that are public stocks. Like you can't get eToro, you can't get Webull, you can't get Robinhood publicly. But Futu is a public, for lack of a phrase, it's a proxy for Robinhood, and it's just taken off. And that's what happens oftentimes in private markets. People will flock to equivalents, for lack of a better word, their public cousins. So anyway, all right, Hunter, we'll write a song about Futu. Futu F-U'd.
Very, very sad song it'll be. So
yes, all right.
Maybe Taylor Swift can sing it.
She's got some good sad songs. I like Taylor Swift.
There you go. Hunter's got the Swifties, man.
Wait a minute. Did you just say you like Taylor Swift?
Not new Taylor Swift, but I'm
Be careful, Don. Be careful.
I grew up listening to country music, and so when I'm like 13 to 16, Taylor Swift's pretty popular. She had some good
country, and then she went pop. Yep.
Yeah, I like the initial country. I don't know. I can't remember the name of her first album, but she had some good songs on there.
I believe it was songs to hunt by, and get mazingoed, which can have any connotation you want to infer. But all I know is that
get mazingoed. That would be the name for my followers, the Zingers.
You know, let's talk about this.
Hell yeah!
What are
the Zingers?
The Zingers?
The army of the Zinger Army.
And the Zinger Army is going to be emailing and talking.
The Zingos.
Is it the Zingos or the Zingers?
Hey, you can't name it for him. He's got to name his own army. Like I'm wearing the Kiss Army T-shirt today, by the way.
He can't give himself his own call sign. That's not how it works.
I was called Zingo. Like almost everyone I know called me Zingo all my friends do for the most part.
Zingo.
And things that are much worse that I really probably shouldn't say on the show, but I would say Zingo and Zinger are pretty common.
The right time where we have a confessional and you tell us all the dirty names people have called you.
Don't egg Tim on.
This is what makes the show the best. Like there's some
but you have no filter. That's the problem, Tim. I'm a little nervous.
I mean, I've got one I can share that isn't entirely awful. One of my best friends, Logan, he likes to call me Madildo. So there you go.
I legitimately didn't expect that to come out.
We need to get a
If it needs to be edited out, I'm sorry, but I feel like that.
We don't edit the show. You know the rules, Hunter. We don't edit the show. That's what makes the show so great. Like if people want edited and polished, there's a number of places you can go to get your canned stock market information. But if people want to know Hunter's name, who gave it to you?
My friend Logan.
Logan, I would like to
Logan.
say thank you right
Yeah, he's
now.
a
Thank you
great
very
guy.
much.
And
What
that's
does
one of
Meemaw
many.
think about that? No, my mom. What is it, my mommy?
That would be
Mommy.
the first she's heard of it.
Meemaw.
I'm sure she won't
That's the
be
first she's heard
very
of it.
enthusiastic about it.
She'll
Wait,
be
that's the
blushing
first.
this weekend when she hears
She,
that one.
she listens to the podcast, right?
She does. She actually she
She's
loves the
gonna
podcast.
slap your mouth next time she sees
So
you
what I wanted
saying
to
that.
ask you, what I wanted to ask you, Hunter, is if that's the Tame story, what are the other ones?
No, I want her to be drinking.
That's right, Dan. That's a good point, Dan.
That's what she's going to ask you now. She's going, wow.
I want
Well,
her
I
to
mean,
be taking.
Now,
I'd
my
love to
question
share
is-
Logan's
My
name.
question is, if Alex starts to get followers, are they going to be called the Coots or the
The
Greeks or
what?
what? Huh?
What was that first one?
What was the first one?
I say the Catooters.
I could have swear you said poops.
Yes, I thought.
Hey,
That's what you heard too?
It's
How about-
Catutus.
There's a drug. I see a commercial for it because here's the secret, folks. My brain hurts after there's a tornado that goes through my house from about 6 to 9. I got between Reagan, Remy, and Nora. It's just, I mean, from when we get home from daycare and I put on Steve Harvey, and I only know this because the commercials for the Family Feud. By the way, Steve Harvey, best brain relaxer ever. Katuda is a drug, right?
I think
Keytruda.
Keytruda. Yeah.
Keytruda.
There you go.
I think it's a cancer drug. I thought of Alex, when Alex, when you told me how to pronounce her name, I'm like, oh, it's Alex Keytruda.
It's funny in high school and stuff in college. My friends, my nickname was my last name. They just called me Katutis. No one really ever called me Alex.
That's really clever. I don't know how they came up with that one.
I don't know. That's what
They called you what? What'd they call you?
they just call me by my last name, and some of my friends call me Al.
Oh, that's a great song. I bet you that's Don's favorite song. Paul Simon, Chevy Chase. You can call me Al. Here's what I'm thinking.
You know
Don
music.
Don is a closet Paul Simon guy. Diamond on the soles of Don's shoes. I'm thinking that, let's see, what else? Oh, Bridge Over Troubled Donald. I'm thinking there's a ton of songs. You like that, Danny? Thank you.
Yeah, that'd be incorrect. However, that song is still better than anything Huey Lewis put out.
Oh my God, Huey Lewis. What's the news with Huey? I don't think he's going to sing again. Like that's heartbreaking.
Can we talk about how bad the Super Bowl halftime show was? By
the way, there's a funny meme going around about that, Alex, where you signed up for Bruno Mars and all you got was The Weeknd. And it's a side-by-side picture of Bruno Mars and The Weeknd. I'm like, oh my gosh, that is effing perfect. Hold on, I've got it on my phone. I will show it to you right now. By the way, folks, there's a number of stocks. If someone's getting pissed out there that, give me the stocks that have the potential to go up, please. Well, look, I think this Neo has some opportunity.
Hey, Alex hit 2 home runs last week with his.
Yeah, we're gonna get there in a second, though. I took a screen. Oh, by the way, here's the Valentine's card. Not to get your wife. This is at Target. Can you guys see my screen? Hold on, I'm gonna.
Too much glare.
Okay, this is at Target. So you see that picture, right?
Yeah.
Now let me see. That is the inside of the card. It's a Target. You would never think that card's at Target. I'm like, oh my gosh,
Did you get it? Why didn't you get it?
No, because I couldn't get it. God, where is that?
Yes, you could have.
Yes, I could. No, I couldn't get that. I'm looking for do I not have I don't have the Bruno Mars. Like I'm so bummed that I don't have that Bruno Mars picture because it is funny. Alex, what's your research, man? I'm going to look for this while you give it to me.
Just to review last week's ideas was Chewy. We'll start with that. And luckily enough today, it's up pretty good. So we were talking about how it was holding that 21 EMA around that $100 level. And that's a really good spot and range to potentially get in if you didn't own it. I see that.
Best? Yeah. I mean, Don, you're missing it, man.
Oh, Jesus.
That's hilarious.
It is.
When you wanted Bruno Mars, but all you got was The Weeknd.
True.
That Bruno Mars halftime show was one of the all-time best.
I love the Bruno Mars halftime show.
The best I've ever seen.
I legitimately thought those were jock straps on the dancers' faces for the weekend.
That's what it looked like.
It did look like
Okay,
that.
I didn't know if I was the only one, but I really thought, I'm like, why are they wearing jock straps? Here they were masks with weird headbands. I'm like, they
I will
totally
say
look like.
the weekend was better than Travis Scott last year.
I
Travis
don't even
Scott,
remember that.
it
Listen,
was
nobody
awful.
beats Justin Timberlake at the Eagles Super Bowl. He's what powered them to a second-half victory. Come on, JT.
Wasn't that the is that the Janet Jackson rip the shirt off thing?
No, that happened when I was on a boat right off of Iraq. I think that was 2003,
I remember that.
2004, something like that. I'm pretty sure I was on a ship for that, about to disembark to Iraq. All right, Alex, give me two of the stocks you're looking at this week, man.
Oh yeah, sure. And then last week also we talked a little bit about Airbnb, but for this week, I want to go over something and just one because I just want to talk about it a little bit. And the stock is Huya, Huya.
This is Chinese Netflix, right?
Yes. No, it's not Netflix. So just forewarning to anybody watching, when you invest in a Chinese name, you have to really measure your risk because you never know what's going to happen with the government there. And it's not an American stock, so you never know if there's something skewy going on with the financials. But for now, some names have really worked out. And the precedent I'm using is Baidu. And the reason is Baidu back in 2009, 2010, China locked down any kind of search engine to Google, and they would get directed to Baidu. Well, now Twitch, the biggest streaming gaming company in America owned by Amazon, are blocked in China, and Huya is that play. So they own half the gaming streaming sector for that market. Asia has a way bigger population. They are the front for esports. They have more active monthly users than Twitch on this one platform. ARK is building a position. Kathy Wood has been buying it. Another good fact is the esports market, it's still very early. In the next 3 years, it's projected to triple in the next 3 years. Excuse me, double. Tencent has a big stake in Huya. If you can pull up MarketSmith, I actually want to go over, this is what got me looking at it, besides the price action.
That's right. Just to describe it to me, I can draw.
Okay, so the fundamentals are there. The 2021 estimates off the top of my head, it's like a 47% EPS growth projection. The RS line, which is the number one indicator that Bill O'Neill would use, has a blue dot on it. So it's bolting up on the RS. Now, like I said last week, I'm not advising you to buy here. It's extended. It broke up past the pivot. It is a stage one base. That whole chart right there is called a due diligence phase. Institutions are trying to learn about the company and the stock. And now the right side of the phase would be the accumulation phase. It could be in the start of a big run. I'm bullish on it. If you're going to play this kind of name, don't go deep in your personal portfolio with 10 to 20% of your money. Measure your risk, be smart, but I am bullish on this name.
Okay. Hunter, what you got, man?
Just got a handful of Sweetums here, aka Prince Valiant, aka Zinger, aka Zingo, and aka one I won't repeat again.
There you go.
Pull up ONEM for me. I want to cover a handful of names that held up very well when a lot of other growth names took a pretty big hit this week. So ONEM did not budge really when a lot of extended names were getting sold. And you can look at the chart, they're continuing to be strong today. They actually, while we were on the call, they went red, and then I pulled it back up 20 minutes later and they're up 1%. So we bought this is owned in-house. I bought it in the family account as it broke out in the 44 range and then added to it around 48. But it's just continued straight up and rode the 8-day up as well. So another one that's held up really well and showed some strength this week, Upwork, UPWK.
Sorry about that.
It actually had a really nice day yesterday, even while most everything was was taking it on the chin a little bit, at least extended names were. They held up and then went right back. I think they were up about 8 or 9%, came down to being up in the 2 to 4%, and then went right back up to being up 7 or 8% again. So just two names that have been really strong that were also extended, but just didn't get hit like a lot of other names did. So either not as much selling or more people willing to buy at those levels, one of the two, or a combination of both. Another one that is owned in-house that it's actually held up well is PD, pager duty. Chart looks relatively similar to Upwork and ONEM, but it's just continued higher. Hasn't had many ugly days. You can see it's down today, but it's riding the 8-day if I'm not mistaken. I'm just pulling it up. It's actually very close to the 8-day right now, about 1% above it. But even on a day like today where it's down 2%, 75% below average volume. So for what it's worth, these are stocks that are holding up better than a lot of other ones. And also, if you don't mind, pull up Z for me.
I like, man,
earnings.
this Zillow thing. I sold this way too soon. Look at this move.
Yeah, big volume yesterday as well, I believe.
Oh, that followed through today too. Wow.
Yeah, about 400% over average volume on yesterday. So they beat on EPS, but I think what was really important is they upped their guidance pretty substantially. And
an acquisition. And that's an acquisition that's supposed to be very critically acclaimed too.
Who did they buy?
I read it. What's the name of that?
I read it too. I just don't remember. Do you remember?
I don't recall either. No.
Okay. That's all right.
But obviously this one has been really strong, but I just wanted to cover it because that is a legitimate gap up. That's the highest volume they've seen since middle of like August 10th-ish when they went to 85.10.
I think Zillow has a program, and I think, and this is kind of, Don sometimes talks about this, the transformative technology of companies. I don't know how transformative it is, but I believe Zillow is buying the homes. Like they'll actually buy them from.
They're a brokerage in a way now.
Yeah. Which is interesting. Think about it. Like it's clearly been accepted well by Wall Street in terms of price.
They bought showingtime.com.
Okay. When that was first announced,
that's right. Yep.
Think about it. It's realtors that a lot of realtors will tell you they hate Zillow, but that's where everybody goes to. They don't go like is it Realtor? I think Realtor.com. I think Zillow beats them out in terms of traffic.
Oh yeah.
But you want to talk about
traffic was really good when they reported as well.
Well, it's just like car dealers hate Carvana.
Yeah, they hate TrueCar because they're telling you what the quote unquote true price. Yeah. And so I think because you don't need you've cut out the realtor. This is almost direct to consumer homes is the way I think of it. I sold this way too soon.
Well, and from my standpoint, it's kind of like when you want to go buy something and don't want to have to go get it. You go to Amazon, but like if I want to look at homes or condos or apartments in any given area, first thing I do is go to Zillow, draw a map on the area I want to look at, and just go through it that way. And you can sort by private listings, agent listings. So and I think
exactly
for a lot of young people, that's how it is. Like I want to go look at homes or whatever, I go to Zillow. So there's value in that inherently, as long as they can maintain it.
Don, what you got? I got like one thing I want to talk about in terms of bearishness. But
I have one more thing, Tim.
Oh, sorry.
No, it's just a sector that's been really strong this week. SOX or SMH semiconductors have been strong this week, as well as Alex mentioned a Chinese company. KWeb has also been strong this week. Hasn't suffered a sell-off.
This is the new administration too. I'm convinced of it. The new administration. This is price signaling that the new administration is not going to be like the old administration. And I like the China stocks. Although you just got to assume all the things that Alex said. I think you just got to assume that, right? You just got to assume that, like when China gives you a GDP number, it's probably going to be good. Like they're. Or if it's really
Luckin Coffee last year, LK.
I'm very familiar with Don and I. Very familiar. Don and I. What's the new ticker for Luckin, Alex? Give it to me, please.
Oh, I couldn't tell you because I haven't looked.
If someone can look, give it to me because it's a model. book stock for me. I printed out the chart. It's the best sell we've ever done. I'm convinced of it. I don't.
Pulling up on my TOS.
Yeah, I'm not seeing it in Mark and
No, you won't see it in IBD world.
Deleted it.
What you got? I'll just type it out. Let me see if it gives it to me. LUCK.
There you go.
Right there,
LKCY.
LKCY. Down a little bit. Yep.
Oh, there it is. Thank you.
Yeah.
So
Oh, that's
Don
beautiful.
and I, this is a great looking chart. So we bought it right. This isn't going to do it.
2008.
Yeah, so we bought it right here at the beginning of March. It was in the 30s, the high 30s, going to 40. It looked like we bought it right here, and then it was just like a couple days. I remember this because I was in Nora's room trading this with him, and then we sold it right here because it broke our rules. And Don ties into what Don was saying earlier. Don, at the beginning of March, what was the rest of the market doing? Selling the F off. And so Luckin broke, the market sell it off, and we just got out of the way. And then before you know it, that happens. And here's March. When someone says, "Did you sell the top?" This is like the one time I can think of off the top of my head that it's the best sell I've ever been a part of. I mean, I mean, there's so many bag holders along the way with this chart. So
the big lesson though is that you got to be careful with the China plays because they don't have the same regulations that we do.
By the way, and was it Hindenburg or was it Citron that got that ball rolling, Don? Do you remember? Somebody
Probably Citron.
Yeah, and so when someone says that short sellers don't have any place, I mean, there's a lot of negativity about short sellers. That's one of the cases where they really brought it to light. And then before you know it, you're getting looked into, and then before you know it, it turns out it's all fabricated. And so really interesting. Don, what you got?
GrowGen, GRWG. You asked me a couple weeks ago, what's the difference between a pullback and a sell-off? And I said it depends if you own the stock or not.
Yep.
That pullback to the 21, go to the left, keep going, right there. Those three closes below the 21, note to the right.
Oh, I'm so sorry, right in here.
Right there, yeah, those three closes below the 21 shook me out. So I owned it at that point, so that was a sell-off. And the mistake I made was not buying it back until it pulled back yesterday to the 21 and re-entered. So that's a case of something getting too extended, and you can take advantage of a pullback into the 21 as opposed to a sell-off that gets you shaken out. And the mistake I made with that is it broke the 21 but didn't broke the 50. Leading stocks, I kind of have a rule that I should hold a piece of it, as long as you don't break the 50, and it didn't, and the market was selling off. I was looking to raise some cash, and this one was a casualty of that.
This is a 195-minute chart. It's a nice pennant that's forming. What else you got?
Key on the indexes consolidating at their +2 ATR. We've got a couple of hedges on, but the growth stocks that we're holding are still going strong. And
I like that sideways.
If we pull, we may maybe just go sideways and have the 21 catch up to the indexes. That would be the best case scenario, because leading stocks are going to continue to outperform. And if they don't, like Tesla, this will be its third close below the 21 today. That's getting booted out of the 21 over 21 list, which I'll be detailing on tonight's video.
Really good stuff. And I've somehow, there we go. There's the chart. And I'll show it here. Was that all you got, Don?
That's it.
Okay. Don's got the 21 over 21. Real quick, if you want Don's video tonight, the 20 or anytime you're watching this, the 21 over 21, it's going to be Revere Asset Daily Market Insight. And then it'll place right on top of that video. And all of our videos for the history of time immemorial are right here. And you can people always ask us, I'd like to back test you because I'm thinking about coming on board. Watch the videos. I know it's a lot of work, but that's the back test. And trying to remember what the market was doing. The easiest way to look at that is you can go back to the videos, just hit the next button, go back to this time last year, and see how we progressed with the thought process of how we started easing out of stocks towards the end of the month. And there's one video I remember in particular, I believe it was February 24th of last year. I'm doing that from memory. If this level breaks, this is what we're doing. And then Don had done.
The 24th, that was the big down day.
Yeah.
Yep.
And then we just took action. And Don had done a lunch and learn, which he's got one coming up this coming week, and you can get that by signing up here at the webinars page. Don did a webinar in January, like market topping process, and it's a really big deal.
Stay clear of the bear.
Yeah, that's what it was called. And we're not guessing when we say, hey, the market, I mean, we can show you the market's extended on an ATR chart, or we can tell you, yeah, the market, it's a good chance the market could sell off here. It's been running so strong, but we're looking for fact-based evidence, a preponderance of evidence that that's what's going to happen. And then when that evidence presents itself, we do take action. And you can see all of that. It's the ultimate back test by just going to Daily Market Insight and scrolling through the videos. But I would say the easiest thing to do is, because most people are concerned about the downside of the market. No one's afraid of making money in the market if you're long. Go back to February of 2020 and just watch the videos and see how we handled. Danny, I'm going to give it to you. Give us the normal. Do you have anything to add, Danny? Give us the normal outro, and then I've got one more thing.
I do. A very good way to do this. So remember last year in 2020, the markets had a hard, so the definition of a pullback or a correction, the classical definition is 10% or more. The definition of a bear market is 20% or more. Well, last March, the S&P sold off well over 30%, right? Now, it came back very quickly in about 3 to 4 weeks, 5 weeks. Of course, the Fed spent a couple $1 trillion of funny money, but, you know, just a printing press. So that was actually the fastest bear market in stock market history. But Don had actually done a video, a webinar, and I'll get to that in a minute, called, how to avoid the bear that you were talking about, Tim. And he goes back from 1968 and goes back all through the last 12 bear markets since 1968. And then he says, look, I don't know whether it's 2 weeks, 2 months, or 2 years, but it's gonna, at some point it's gonna happen. And you want to have a plan in place, in action, so that when it happens, you're not making decisions under fire. Now, the market sold off two months later, so Don looked like a damn genius. And then in a month, he did another one, said, okay, the bear's here. Where do we go from here? At the market bottom, he did another webinar. And then the next month, he did one when the market was about halfway up. Point being is, those 3 videos, they're hour-long videos each, show an entire market cycle condensed in a 4-month period. That's it's never happened before like that fast, but it's a very good way to see how, number one, you could kind of manage risk, but number two, how we actually did it and what we were actually doing from a historical perspective. I actually had that in a pre-done email with all 3 links. So if anybody wants to see that, they can email me and I'll send you the links, or 3 links. So that's the first. And then I threw in a bonus one there where it's kind of overall portfolio management, different things that you can do. But so so Don used to do a webinar, Lunch and Learn, at noon Eastern on Wednesday, about every other month. But we're growing, he's gotten busy, and so now he's doing them about every 3 to 4 months, time permitting. But he's doing one this next Wednesday. So if you go to webinars on the page right there, that webinars where Tim's marker is, and you sign up, you just stick your email in there, he'll register you, and then he'll send you a link before that starts. That's next Wednesday, the 17th at noon Eastern time, 11 Central. And we don't spam you, we don't email you, we don't send you all kinds of junk. It's up to you to reach out to us if you want our help. Then if on the subscribe button, that's this weekly radio podcast, Your Money Podcast, that we send out every Saturday morning. Plus, you get our daily market insight that I'm trying to get the guys to do 10 to 15 minutes, but sometimes they get inspired and they're longer. But it tells you about what the market is, what the indices are doing, whether it's risky or dangerous, a couple ideas that we're actually doing, a buy or a sell, and it gives you some research ideas. And again, we don't spam you, we don't send you anything. So those are really 2 very easy ways to find out how we work, what we do, and it can actually help you if you're trying to do it on your own. So that's kind of the backdrop. I say, folks, listen, if you like what you heard, please tell a friend, tell a neighbor. We grow by word of mouth and referrals. We don't spend money on advertising. And you can, like I said, the subscribe and the webinar, those two buttons are two different buttons where you can stick your email in and we won't bother you. It's just up to you to get all of our free content. We put out lots of research every week. It's spam-free research. You can also email any of us with questions, Dan@revereasset.com, Tim@revereasset.com, Hunter at Revere Asset. And look, there's Alex the Greek, Alex at Revere Asset on the front page, baby. And then we've got Don at Revere Asset. You can also call us old school at 855 Real Wealth.
I always tell people this is the easiest thing. Just call. Like the questions sometimes get long. They I don't want to say the word convoluted, but sometimes they can. It's just easier to call. No salespeople. You're gonna get Danny. Danny's gonna answer the phone and talk to you. So I got one last thing here, Danny. Two last things, real quick. I pulled up this chart of the money supply. So this is the money supply for the U.S., for the United States. And I want to show you something that is really interesting here, because the question gets asked all the time. When is this going to end, Danny? When is this going to end? And if you want to pull this chart up, you can email me. I'll be more happy to send it to you. You can just pause the video right here, and you can just type that in. This is the Fred website, which is a really great website. But look at what the money supply was doing. It was flat, right, to start last year. There's January of last year. And then look, here we are in April. So we had that month. And now here is the government. There's March 2nd. And then look at this huge spike. And it's no shock that the market just exploded there. And so it really coincides with, like, if you look at the end of March, and Don, I know you remember this, we bought Amazon after the sell-off. Like, we were short the market, net short the market come last March. But if you look here, and we bought Amazon, I remember this, it was March 23rd, I'm fairly certain of it. And so here is
back in 2019 right there, I think.
Oh, I'm in 2019. Thank you, Hunter. Thank you. Here we are. There's 2020. So where's March? At the end of March, it was right here towards the end. And there's something that's really interesting here. Amazon had closed twice above the 21, even though it was, had an overhang of the 50-day. That's where we first endeavored in Amazon right after the big sell-off. And it's just no shock.
It's a nice buy.
But well, thank you. But that's just following the rules. Some of this stuff, it doesn't work out like that. Like, it doesn't work out. But the market is, Danny, this is right up your alley, all this that I'm talking about right here. But look at the March 16th. Look at the dates, March 23rd. Look at the steepening. There's March 29th. Right here is March 29th.
I have a question. Is that the Fed coming in and printing more money?
That's exactly what it is. That's what I'm demonstrating, that this whole market, unless there's some extraneous event, until they tighten the money supply, I don't think this is going to end. And for better or for worse, like
reserves, but they're not going to be able to tighten because leverage works both ways.
Right.
They paint themselves into a corner.
And so you're going to have, if I did these dates for this pullback, right? Like, here's 2021, and the end of December and the beginning of January. End of December was tough, right, Don?
Yeah. There was some pulling back. Yeah.
Look at that decline in the money supply. There are very few economic charts you can look at that have a price correlation to the markets like this one. Like, they're often lagging. And so you can get a heads up that things might be getting bad, but it doesn't mean that stocks are going to stop going higher. But look, the money supply has flattened here. And what have the indices kind of done of late? They flattened. And so if you see another uptick of the money supply, that's why you buy the dips on this market. And it doesn't have to be that way, though. Like, that's a really bold statement. That's why you buy the dips on this market. if the market's holding to 21, the VIX futures aren't inverted, and this is still sideways to up, I think you stay invested here. And Danny had that cartoon at the beginning of the show where it was the clown and the Fed. They're both clowns, right? Were they both clowns in the cartoon? Where are you going to put your money? The Fed has driven you here, and you know that. And so
I know where they can put it. They can send it over to Dan at revereasset.com.
There you go.
Oh, that's 2 shows. You know what, Hunter? Where's that? How many shows is this with you, Hunter? This is 2 shows. Look at that. That's how you do it.
By the way, the Fed also has a great phone app.
Did you say a great phone? The Fed has a great phone?
They have a phone app that you can use. So if you're not at your computer, you can pull this.
Oh, understood. You mean the Fred data, not Jay Powell.
No, yeah, no, you're right.
Not Jay Powell. I got you. You said Fred. I thought you said the Fed. I'm like,
well, I did say the Fed, but that's the Fed. That is the Fed. That Fred is the Fed St. Louis.
Right. And so, but this chart, you can see the pullbacks happening. Like right here is what happened towards the end of October. You had that pullback in the markets. That's the election. And so these very few charts line up like this, but it's something to keep an eye on. Like if you, for some reason, like let's say you saw the money supply drop sharply, but markets were still treading water. I would be paying attention to that greatly. I'd be like, Danny, you brought a dog in.
Yeah, that's Minnie.
There you go. And so it's just something to pay attention to.
Oh, what a cute dog.
And so I think I'm going to end it there. I had something else stock-wise, but I can save it for the next time I do a video. And I think it's a great way to just throw in a little economics because
I like that. Thank you for sharing that. I didn't know about that.
Well, the money supply is a really big deal. And a lot of people throw out the money supply. Like people will throw out, well, you know, the money supply is going to tighten. That's when you want to get out. But it's so esoteric because people just say things and they don't have any proof. Like they just say things. And this is something you can absolutely look at if you're not familiar with the money supply or understand anything about it. You could do your own little research and then match it up with charts. You can do that right in Thinkorswim too, but most people don't have a lot of people don't have Thinkorswim, so I brought it up on the Fred to show people.
By the way, so the way that you really know whether the Fed's lying or not, because sometimes they're saying they're tightening and they're actually sticking money in the system. Other times they say they're loosening and they're actually pulling money out. So you want to look at what's called the excess reserves or free reserves. That's the excess money supply over the required reserve requirement at the banks. So you know if they're flush with money or not to be able to loosen. And so, and there's a high correlation to the market moves with the excess reserves.
Sure.
They're very highly correlated. That's what Tim's showing.
So, all right, Danny, take us home.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, and stay warm, because if it's really, really cold here in Texas, it's got to be bitter cold in the rest of the country.
Except for Donna's.
We'll except for Florida.
Arizona,
probably Arizona too.
Oh, okay. All right.
Arizona's nice.
This meteorology segment has been brought to you by Wrong Way.
Yeah, exactly.
2 or 3 states that aren't cold, but we'll talk to you next week on Your Money.
Dan, you're so Texas.
So great. If we're cold, you're cold.
Damn it.
Oh my gosh, Danny. You doing a meteorology segment is the way I want to end every show from now until Memorial. Like, I don't want you to not do a meteor. I want to know the weather for different parts of the country based on what we're experiencing here for the rest of the year.
I'll be the new Roker.
And then I'll tie it to global warming for everybody.
That's how we end the show, folks. See you next week.
We got to end the show before Don's going
on Your Money.
Solar cycles. It's all about solar cycles.